Welcome to the coffee shop, everybody. This is your host and barista, and I don't do videos here that much, but this one is important. Okay, so recently, as of about 8:35 or 8:34 p.m. Central Time, U.S. Yesterday, on December 4th, Bitcoin did hit the $100,000 mark, and apparently there were a bunch of buy orders that were in place at that level, which allowed price to just keep moving up an extra. Let's see, it moved up and reached a peak after 100,000. It reached another $4,000, which is great. $4,200, spike after that. So if Bitcoin is following the regular methods, if it follows the regular methods, anything like Forex and other commodities do, then you have to understand that in this parabolic move, right, in this one parabolic move, there were fair value gaps that were created. This just happens. Anytime there's a parabolic move, just a big spike, right, there are fair value gaps created and price comes back to retrace those fair value gaps. Then you need to look for reactions at those fair value gaps. So if you were looking at like a 1 hour chart, you would just see this, right? And you would assume that all of this is a fair value gap. And you would say, okay, the fair value gap basically runs from, let's see here. So you got one here, right, which is reclaimed. And you have this one from the low of this candle, right, all the way to here, right? That's what you would say. And you would assume that that's where the fair value gap is, but that's not all of the fair value gap. There is something in the way of this fair value gap. So what you want to do, if you want a 1 hour, then you really want to jump down to a smaller time frame and find this parabolic move. That's really what you want to see. So I'm going to drop down to the 5 minute, turn my microphone up a little bit. And inside of this one parabolic move, you can see where the smaller fair value gaps are. Okay. And you can mark those as your exits and places where you want to set alerts and find reactions and so on, right? So let me delete this. Okay. I'll take this off and take this off because I want you to see what the fair value gap looks like. I'll also take this as 100K. We don't need to see that. Okay. I just want you guys to see these moves. So now, this video is important because people often wonder, how do you trade in price discovery areas? That's what this is about, okay? Trading Bitcoin, right? Trading any crypto in price discovery zones. There we go. All right. So I talked about this before in a previous video with TradingView. And basically, when price is in a discovery zone, right, it means it's in an area, right, where it's never been before. So the only way to trade this is that you have to wait for fair value gaps to be created, go to a smaller time frame, or you wait for these little pullbacks to take place. Like if you get a pullback here, you need to wait for price to retrace back to this area, and then you start using your strategy. But there is no real way to trade something that is in this parabolic move. Okay, you can assume to try and get in, try and get in and try and get in. But you have to, you also have to take a high risk that the price is just going to pull back very hard on you. For example, these support levels were broken, the resistance level was broken, and price on the next candle shot way up here to the 100K and immediately pulled way back down here. Now, in most people, that would just wipe you out of your broker, that would liquidate you. That's a pretty steep decline right there, right? But you'll notice that in this parabolic move, there was a lot of buyers that actually jumped in at the $100,000 mark. And once you come down to a smaller time frame, you're looking for the fair value gaps, right? So let me just kind of draw one in here. Just looking from the bottom to the top, we can already see that there was, like in this move here, right here, you can see here's the low of one candle, the high of the previous one. And you'd say, hey, here's a fair value gap. But no, I want you to take a look. See, this low came down and it wiped out any fair value gap that existed down here. So this is not the fair value gap, right? So price comes up, gives you a new low afterwards, right? And it doesn't connect with that high on the other side. So there's a fair value gap, okay? Then the next low comes down and it taps into that zone. So you have to say, okay, that's it. That's what's left of the fair value gap, right? So let me just mark this as an FVG. There you go. So now in the next move, you have yet another fair value gap, right? So let's just kind of put that one in. You have the move going up. There's a low sticking down, a low recovering that same area. We're just going to go right here with that one. And prior to this candle, you have a high right there. So I'm just going to go like this. Here's the fair value gap. And you can see that that has already been recovered and reclaimed completely, like completely. Okay. But down here, there is a fair value gap, which I didn't mark right there. See, you have the low here, the high there. Okay. Right there. Okay. And so, yeah, I think I neglected to say this one because it was this low sticking out, but that's fine. So you have the body of this candle, which is not covered by the high and the low on both sides. So if you take these and just kind of drag them out, you're going to see, well, let's drag this one out first, right? This one has not been reclaimed yet. The other one has, okay? So you come out here with this one, and then you've got this one. Just kind of grab that right there, okay? So let's kind of pull this out here. Now, again, you're looking to trade in this price discovery area of Bitcoin. So you want to see reactions when you get back down to this level. That's what you want to do. That's when you're going to start looking for example, you can use a strategy that allows you to find support, which is a change in the state of delivery or a continuation in the state of delivery, right? So what you have is you have an open that does not clear a previous high, right? The open goes to the close, doesn't clear the previous high. So you have a lot of resistance here, but you have support here. So this is resistance and support. What you could do here is you could say, hey, I have a low right there. I have an open right there, and there's enough strength at the open to break the previous high and cause a small fair value gap. So the open here is a lot of thrust. There's a lot of thrust here. The open breaks a previous high, and it creates a fair value gap in the process. So you could extend this one out, and you can call this one support, right? Call this a support zone. Okay. Oops. There we go. I think I got it. Just kind of do this here. There. Let's drag this one out. So what we're doing now is if you are trading fair value gaps, right? If you're doing that, and you can see that Bitcoin has left behind a couple of fair value gaps, and you know they exist. They have to be reclaimed, right? Price could come down to this fair value gap, but you want to see what's in the way. And in looking at the smaller time frame, you can see that there's an actual very strong support level at this area. I'm just going to kind of beef this up a little bit because it's really strong. There you go. And I'm going to mark like the center of this zone with an alert. I'm not going to do it right now. So that price gets down to this level. I'm going to look for reactions when the alert goes off. Now, the other thing is just because price comes down to, right, a fair value gap doesn't mean it's going to bounce off of it. You wait for reactions that are there. When price comes down to the next fair value gap, if it gets through this strong support zone, I want to find where something took place, something of relevance that is down here for price to come and bounce off of. It's another support level, right? There's got to be another one down here. There should be anyway. Aside from this consolidation zone, right? This consolidation zone is just consolidation. There were short orders being placed and buy orders were being put in here so that these shorts that took place from 100,000 would get bought out. If that's the case, then that means there are orders like this. There's orders like this. So if there's a stop loss down here and it gets wiped out, then price could continue down pretty abruptly. So I want to find something below this level. I'm sorry, below this fair value gap. I want to find something of significance below this level that will tell me it's a strong support zone, right? So we're going to come back here. We're going to look really far back, okay, because we have this fair value gap here. The way I like trading fair value gaps is I like to look within the zone of the fair value gap, and I like to look left, wherever the fair value gap was created. I want to look to the left and find something of relevance in price action. I can't do that here because price has never been at 100,000, but previously it was in this $99,000 range. So we can simply look backwards, and I started marking it earlier. You can see down here, way back here, there is a potential change in the state of delivery that's in this zone, that's in this fair value gap zone, and it's right here. Okay, potential change in the state of delivery. What I have is a minor downtrend, right? It's a pullback with there's a divergence taking place here. Okay, you have a pullback, right? A rise, a pullback. So you have this downtrend taking place. Okay, one of the last downtrends to take place, right? Lower highs, lower lows. But then you get this candle, which is a potential change in the state of delivery. This candle ends up breaking this downtrend and causes a set of higher highs and a higher low. So the open of this candle finally breaks the high, and it breaks, right? And it breaks the previous high just a little bit, breaks that one. So I'm using the low of as the open of this candle has the thrust. And you can see if you just look to the left that there is a lot of support at this level. If you look to the, I'm sorry, look to the right. And if you look to the left, you can see that doesn't want to get below this, doesn't want to get below this, and you have a rejection at that same level of this thrusting candle. So this is an up thrust candle. Now, on the way up, you have to find a change in the state of delivery. Again, right? So your state of delivery currently is an uptrend right now. That's the delivery method. You want to find something that causes a change in the state of delivery, the cause of the change in the state of delivery. So that's going to be where you have higher lows, and then all of a sudden you have a lower low followed by a lower high. So you have a lower low and a lower high. How did you get to this low? You got to this low from this open, right? So this would be the change in the state of delivery here, right? That would be the change in state of delivery. So this is a change. This is a change. I'm going to mark both of them, and I'm going to extend both of them to the right, okay? And you can see that, again, there is a, what do you call it, a reaction from that level, okay? And, oh, yeah, so we're still going right here. Can't get any tighter. Yeah, I can. Good. And just come out here. So this strong buy and sell orders at that point. There's significance taking place at this point. So here's what I'm looking at, right? This is going to be potential change in the state of delivery. Let me adjust the text so it's on the right side and I can see it. Now, when price action gets back down to this fair value gap, right? If it gets through this support level, right? I'm just going to pull this back here so we can see this. Went out too far. When price action gets back to this, like it starts coming down, let's say it clears out the rest of this fair value gap and it breaks through support. This is how you set up a strategy. Strategies are not a bunch of indicators. Strategies are not a bunch of, chart patterns and here, higher, high, higher. No, that's none of that stuff. Okay. No weird wedges and signals from groups or whatever. That's not it. A strategy is when price does something, I want it to get to somewhere else and look for this specific type of reaction, and I'm going to do X or I'm not going to do X, right? But you have to find some kind of bias to tell you what to do there. So you can clearly see that there's a fair value gap, and inside that fair value gap, we have a change in the state of delivery. But the interesting thing is that this area inside the fair value gap, this is going to be a strong support level, okay? There's a lot of support here. And if price breaks all the way down to here, then your support level changes into this. This is the strongest support level, right? That's what's going to happen. So I'm just going to mark this. I'm going to take away this. And I'm going to say fair value gap is here, right? And if it gets to this level, I'm going to look for a reaction. Now, we can take a look on the chart, and you can see where my level is marked. I'm just going to mark it here. This fair value gap is here. I'm going to call the support zone at 99,500, a nice round number, right? And then the bottom is at 99,294. Let's say it's you want to go for another round number, probably 99,275, because people will work in significant numbers, and so I think that's what's going to be going on here, right? So I'm just going to drag this out. Price gets to this level, I'm going to be looking for reactions. So I won't be shorting the market, but if price gets down here, I do want to buy. I want to look for a buy signal to get in down here and collect more dollar cost averaging, at that point. Okay. Because I like dollar cost averaging on the dips and not just randomly throughout the week. So that's my analysis for Bitcoin and how to trade the current activity of Bitcoin while it's in price discovery. Okay. Now, some of you are going to ask me, like, where are these lines from? The lines are coming from this RC kill zone, which you guys can get your hands on. Just leave a message down below in the comments. And so let's find out what the RSI activity looks like, right? So I'm looking at a 5-minute chart. Okay, current chart time frame is going to be 5 minutes. I want to compare that to the 15-minute chart. Okay, because we'll be doing 3 times the time frame. Let's see this mark out. Okay, great. So what we have here is the midline is right there, the actual midline. Not sure if you can see that too well, right? Midline's there. The high time frame RSI is below the midline. current time frame RSI is in the bearish trend, and all the way up until now, everything is still in the downs, like it's still in a downtrend. We have a divergence between both RSIs. We have a divergence here, right? It's a little one right there, and it's happening at the support level, which is nice. The point that got me into the divergence is here. So if I break this level, we're looking again at probably long positions, which is fine. And let's see here. So it looks like the two RSIs they're converging. They're turning over each other. The yellow one is your current time frame. The white one is your high time frame RSI. And for high time frame, I'm simply looking at 15-minute. I don't need to look higher than that. If I'm looking at a 5-minute chart, that's fine. Here, though, we can see that sellers, this red line means that sellers are stepping into the market. Buyers have not stepped in or out, right? They haven't really done anything. Buyers are still here. Okay. Now, again, this is the Harsey kill zone. You guys can get your hands on this. Just leave a comment below and you'll be able to get a 10-day access to it if you'd like to. Really cool tool. You can see that the crossover took place here. Big downtrend took place. We have a cross up that took place here with nice waveform moving up. You see the uptrend takes place. Cross down over here, small movement to the downside because it's ranging and it's above the midline. You don't want to do anything, right? So yeah, that's it. All right. And that's my, how to, what to look for in price discovery zones. Use the fair value gaps. Okay. Use the order blocks that you'll find on smaller time frames. You'll be able to find reaction points for when price finally does pull back to those levels, because price always pulls back to those levels. And that's it, peeps. See you next time at the coffee shop.